Hi guys, do you ever feel like chasing the price higher? Like for example, the feeling you might get when the price is moving higher and higher, could be Bitcoin, could be the stock markets, and you feel like you're missing out and you want to chase the price higher? So in this video, I'm going to show you a very simple strategy on how to avoid that kind of feeling and actually set some rules, a very simple strategy in fact, on what to do in those kind of situations. Join me. Alright guys, welcome back. By the way, this is going to be quite a short video, and I just want to make a very short educational video for you on what to do in situations when you think the price is moving away from you and you feel like chasing the price higher and abandoning all the rules of risk management, which of course is dangerous and wrong. So I'm going to show you a very simple method as to what to do in those kind of situations. So I want to give you a very recent example. Here's a chart of Bitcoin. It's a daily chart of Bitcoin, as you can see here. And notice Bitcoin very recently rallied higher and it hit overbought conditions. You can see here on the RSI 21 setting. It's a long-term setting of RSI, and that reached overbought conditions. Now, what I like to do in those kind of situations when price becomes overbought, like when the RSI becomes overbought on that chart, is I like to wait for a pullback. Oh my God, it's very muddy here. Just to let you know, the place I'm walking is really muddy. As I was saying, often when price is rallying higher and higher and we feel like we're missing out and we want to chase the price higher, look for overbought conditions. Because especially when price becomes overbought, extremely overbought, and for example, when price becomes overextended, and when sentiment becomes extremely over bullish, what I prefer to do is just wait for a pullback. But the question you might ask is, well, pullback to what? Pullback to which level? Well, of course, that's a matter of preference or choice, depending on which level you're waiting for a pullback to. But I want to show you my preferred levels. So I have two moving averages on this chart, as you can see there. There's a blue line and there's a pinkish line, as you can see there. So the blue line is the 21 EMA, the 21 exponential moving average. The pinkish line is a 34 EMA. Now again, the reason why I use these numbers as opposed to other numbers, because these numbers are not arbitrary. The numbers 21 and 34 are Fibonacci numbers, as I'm sure you probably know. So that's why I prefer to use these sets of numbers, because they're less arbitrary than any other number. And the reason why I put them on my chart is because usually we see a pullback after a rally, and when price becomes overbought, usually we see a pullback down to these levels. By the way, notice on the chart of Bitcoin very recently on this chart of Bitstamp pulled back to those very levels, pulled back to the 21 EMA and pulled back to the 34 EMA. And as a matter of fact, it held that level. As a matter of fact, it held the 34 EMA, bounced from that level. So you can actually use these averages according to your own preferences. So some traders or analysts prefer to wait for the price to hold that level. In other words, wait for the bounce from those levels, the 21 or the 34. Some chart analysts or traders prefer to actually just position themselves at those levels, exactly at those levels, at the 21 and 34. But again, it's up to each individual person to decide how to use those moving averages and how to risk manage, okay? Now, the reason why it's a good idea to wait for a pullback to, for example, these moving averages at 21 and 34, because you might ask, well, what's the point? The point is that it offers a better risk reward. So rather than entering at the point of highest risk when the price is overbought, and at that point the price has a high probability of a pullback, a snapback to the averages. So in my point of view, instead of entering at that very point of high risk, when the price is overbought, instead one could just wait for a pullback to the 21 and the 34 EMA, because by waiting for a pullback to those averages, it does improve the risk reward somewhat. Now, of course, once price has begun to show signs it wants to hold those levels, like the 21 or the 34, a trader can actually put a stop loss right underneath the point where it's bounced from. So for example, a trader could put a stop loss right beneath the lowest point of support on the chart there as an example. So using a stop loss and risk management is really important, any kind of strategy. The same goes with position sizing. Position sizing is also very important. So I prefer to use this method using the 21 and 34 EMA, mainly on the daily chart and also other time frames too, but I prefer mostly the daily and weekly charts. All right guys, hope this video helps. Bye for now. Cheers.